Alrighty, hey traders, hope you guys are doing well. In today's video, I want to talk about the stock market. Is it going to be a V bottom where we are right now, or is it more going to be like, are we going to create a lower low like sometimes happens before we rally up? I'm fairly confident that we're forming some form of bottom, but I'm going to share with you what I see right now. We saw the really strong sell-off. If you've been watching the markets today, we saw a strong sell-off in the last sort of hour or last half an hour. I'll show you the reason why that happened. Also going to talk about the long-term charts in the stock market, and they're actually looking pretty scary. I'll show you the Nasdaq, the Dow, and the S&P. These are monthly charts and something I've been really looking at. I'm like, wow, if this is a topping pattern, we have a secular year bear market forming right now in front of our eyes. It doesn't mean we're going to go straight down. So I'm going to talk about that as well too. Also going to talk about the silver and gold update. What's happening right now with the silver and gold. Also want to talk about a powerful pattern that you can trade when you're trading. And I'm going to talk about a short trade that I took today. That's right, I did take a short trade, but it was a day trade. I was in and out literally within about 15, 20 minutes, something like that, really, really quickly. So it actually wasn't that long. So anyway, guys, we've got a lot of stuff got a lot of stuff I've got to get to go through today. So let's get straight into it. Don't place a trade based on what you'll see in this video, because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty guys, let's get straight into it. But before I do get straight into these markets, guys, as you guys know, that my coaching program is closed right now. No one can actually get access to it. I normally charge $10,000 to get access to my coaching program, get access to my trading strategy, the daily Facebook group, the weekly group coaching calls, emails, and so much more, and get access to the scanning software and all that sort of stuff as well too. If you are struggling with trading right now and you'd like to get me as your coach right now, for the very first person to email me at haltrader@gmail.com, gets 75% off, so just $2.5 grand. The very first person gets it for $2.5 grand, and that starts straight away and ends at the end of the year. I'm doing this as a bit of a special to help someone out, but just one person only, that's all. But apart from that, the actual coaching program is closed. Let's get straight into it right now. So the very first thing that I wanted to talk about, oh, by the way, guys, the email is haltrader@gmail.com. Let's actually get straight into the markets right now. Now, here's the really interesting thing right now. Is this a bit of a V bottom in the markets, or is it something else? Now, if I go back to, let me bring up this, not this chart. You know what? I'll bring up this chart here. So what we're looking at here is, did I delete that line? Did I? Why did I delete that line? Okay, so let's go back to that weekly chart here for a minute. You notice how the market actually rejected, right? So we can actually see here that we had this support and resistance level where we are right here. I have a bit of support level through. You can see here we came down support level through here. Look what happened just recently. We rallied up, and we've hit that resistance at 22,000 level. And if you remember my yesterday's video, I said I want to see us get above 22,000, because if we can do that, then we're probably likely to start to see a very nice movement up. But today, look what happened. We actually ran up, hit it, and rejected it. So it's very, very, very difficult to see what we're likely to go through today. We are definitely getting a breaking out here. I do believe we're forming some form of a bottom here, but how that plays out over the next couple of weeks is yet to be seen, right? Are we going to just start to move up here on more of like a V bottom basis, right? And a V bottom doesn't mean it's going to go up straight away. It's going to go straight up every day, right? Like this, straight up. A V bottom simply means that, just like we did here, right? Came down, went up, down, sideways, down. You know what I mean? So are we going to go sideways for a bit and then move up for a bit and then go sideways for a bit and then move up? Stuff like that, right? That's a V bottom. Or are we likely to hold here, we're at this resistance, then have a bit of a pullback, maybe a higher low, or even there's a possibility that we actually come back down and create a lower low and then start the rally. Either way, I believe we're forming some form of a bottom here in the market, and I believe we're getting ready for that shoot up in the markets as well too. It's been close to 2 weeks since the United States has been in shutdown. If they have to go through another 2 weeks, then they reopen again. Then everything's going to pick up and everything's going to pick back up again. Say 2 weeks from now, which is the Easter period. That I think that'll give them around about a month worth of closing Talk about the fundamentals here. The technicals, I'm sharing with you what I'm seeing on a technical basis, but on a fundamental basis, I'm looking at that from that perspective, as in like what's going on there. And then it may take a month or two for things to pick back up again, and then the virus should be contained and so on and so forth. So if you look at that, you're probably looking around the June, July period of when things are probably going to be contained pretty much around the world. If you then look at that period, and then because the stock market is probably going to lead the economy, or we're likely to lead the economy. So the stock market's likely to rally first for a month or two, and then things are going to pick back up and things are going to get back to normal. The virus is going to be contained, all that sort of stuff. That's what's likely to happen. If you go back and look at all the times in history, right, even, so if you go back and look time in history, that's what's likely to happen. The stock market's likely to rally first. And then we're probably likely to come out and say it's contained. So if we're likely to get the containment or probably around July, maybe June, July, then fast forward maybe three months or so prior to that, and that's when we're probably likely to rally, because we're probably likely to rally for 2 or 3 months prior to them getting to that point in the markets. Make sense? So that's where, guys, if you're trying to wait for them to come out and say it's all contained and then they're going to open the gates and everything's going to be good, if you're thinking about waiting to get into the markets or buying a longer term position in the markets, and you're waiting for that, you're probably likely going to miss out on the rally, because when we do start to really pick up, we may even be starting that right now. All right, the rally that we're seeing right now, that may be the start of the next 2-3 months before creating a V bottom. Makes sense? We just never know. So that's what I'm seeing through there. Same for the S&P 500, right? We actually came down through. We actually had, what is that level through there? Right, we've actually got this level through here. The major one. Look at this here, right? The major one was this one here. We had this low level. See how we actually created this low level breakdown, and now we're actually breaking back up. This is like a bit of a false breakout here, right? The false, or what we call the final hooray, right? The final hooray is that the market breaks down. As you can see, market breaks down, and now it's breaking back above. We're at this bit of a long-term level through here as well too. Now, the really interesting thing on the S&P 500 is that this weekly chart is also potentially creating some form of a false breakout. So as you can see, right, the market's come back down. See this very long term. If I bring up my monthly charts here, actually, look at this here, right? We have this, look at that major low, and then came down. Look at it, broke below. Now the monthly charts, look where it's closing, right? It's closing right there so far. Anyway, we've still got a few more days of this monthly bar, but look where it's closing right now. If we have a look at the weekly chart, this also could be some form of a false breakout. And then if this is a bit of a false breakout, that's going to catapult us to the upside really, really quickly, right? Just like I was sharing with you in gold, and I'll share the exact same thing, right? Just like the exact same thing with gold, is that the false breakout is to get people short. And then it's like a bit of a springboard, right? And you see this so many times, like even with silver, right? Recently, silver had a massive flush down, and it's now picking back up again. Again, I'll get to silver and gold in a minute, but I'm trying to share with you examples of what's going on there, right? The market loves to do that. So the false breakouts can happen on a couple of different things, right? We may have the market come down through here, right? We have a support. The market may break down and then rally back up. This is one final low to get them short, and then we come back down. We can also have, this is for the bearish side, anyway. The same for the bullish side. The market can come support, break back below, and if it doesn't continue, if we rally up and then continue down from there, then no, it wasn't a false breakout, right? It was just a breakdown. That's where, when we do break out, we don't know. But if we do rally back up and get back above here, and we start to do this, guess what? This here was a bit of a false breakout, and that's going to tell us we're likely to springboard back to the top through there. Makes sense? So it's either two lines. That's why I say it's a bit of a false breakout level there. And it's such a powerful move, because when you see it, it can springboard so much. So it's like, okay, now we're creating, it gives you confidence that now we're creating some sort of a potential final low. And I'll share exactly what I'm saying. I'll share exactly what I'm showing with you in the when I get to silver and gold there. Makes sense? So that's what I'm seeing through there on the S&P. This could be a bit of a false breakout, because if I squeeze my chart, if I zoom my chart up a bit more here, you can see how we actually broke down, but now look what's happened. The very next candle is now rallying right back up. So again, we not only did we rally down below this major low level here, but we rallied down below this level. So this could be actually this whole level here could be two major false breakouts. And if we can continue back up above this level here, that tells us that this was a bit of a final low before we start to see at least a 60% retracement, if not more, to come and close this gap. I honestly do believe we're going to close this gap here, guys. There's no gap at all here on this chart like that, right? And so when you look at this major gap here, major gap. Look at the Dow Jones as well too, right? Major gap. I honestly believe, guys, when by the end of this year, we probably would have closed that gap. I don't know why, but that's just what I'm feeling and seeing. I don't believe that gap is going to be unfilled there. And same for the Nasdaq, right? Look at the Nasdaq. Nasdaq did the exact same thing. Look at this trend line through here. It's not as valid as the S&P because the S&P's got more of a longer length. If I bring up the S&P, right, we see how there's a lot more time in this trend line, so that's a lot more valid. But with the Nasdaq, sort of the same thing, right? We had this major low through here, and we have this trend line coming through. So we had a breakdown. Now we're breaking back up. So that's what's happening through there. But for me personally, guys, I want to see the Dow Jones get back above 22,000. You can see what actually happened even today. Let me just bring this here. If you look at that, that's the 22,000 level. And you can see how that, let me bring back to the daily chart. You can see how we actually rejected off that daily chart through there. So if I go back to that weekly chart now, you can see how we're rejecting through there. So I wouldn't be too surprised if we actually did get a bit of a pullback through here. Again, I don't know. I believe we're forming some form of a bottom through here right now. And so therefore, we're either going to probably break through this here and then start to see this massive, really, really, really nice move up from here, or we have a bit of resistance and we break back down through here and we have a bit of a pullback before we go for another run, and then we start to see this thing rally back up and have a nice recovery leading into the end of this year, guys. So because if the government is now going to keep people locked up right now if you look at it from a fundamental perspective, if the government is going to keep people locked up for, or locked up, have a lockdown for another 2 weeks, that should contain the virus, right? Just like China. And guess what? Things are picking back up again with China. Things are moving. Things are happening, right? So on a fundamental perspective, for the next month or two, things are going to start to pick back up again, back to normal. The virus is going to be contained. It's all going to be good. And then you watch, guys. This first half of the year is going to be like that. The second half of this year is going to be roaring, absolutely roaring. Excuse me. So that's what I'm seeing through there, guys. From a technical perspective and a fundamental perspective. Oh man, I love these markets. I love it. I love trading because, guys, when yes, we have a look at the fundamentals, but guys, the better you can read the charts, the better trader you be, right? So I'm talking about, like, you can see here what the last couple of days I've been speaking about things like, okay, false breakouts, momentum breakings, and stuff like that can be so powerful to you to have catapult of potential big moves. And if you could start to spot it in real time, my, that could be really good. Now, that all being said there, guys, okay, I want to bring you now back to a longer term perspective. I want to bring up this monthly charts here, and I want to bring this to a longer term perspective, okay? Monthly charts. This is the monthly charts. That means that for the rest of this year, we could be doing whatever, but over the next, say, maybe 1 or 2 years, we may be forming some form of a top. We maybe not, right? This is just what I'm seeing through here. So looking at the Dow Jones, you can see how the Dow Jones on this monthly chart. Look at this here, right? Look at this monthly chart. Remember I said before about false breakouts? Look at this here. What do you think this is? Rally up. Oh, geez, I just burped. Sorry. Right? Look at this here. We rallied up and then we broke back down. What do you think this is here? This is what? False breakout, and then we dropped to the downside. Isn't that incredible? False breakouts, guys, they're really, really, really powerful. So even on this monthly chart here, right? But remember, this is a monthly line chart. The line could still move. We haven't closed here. This is just a bit of a perspective, longer term basis, guys. That simply means, for the next 6 months, that we could rally up even more or whatever. Makes sense? But right now, the one thing I'm watching on the Dow Jones and the S&P 500 and so on and so forth, we've got this very big move up, and we have a very nice big drop down through here. If on the monthly chart we start to rally back up and we do start to see some form of bottom here, we do rally back up through here, and then maybe we start to do this here on a monthly basis. Maybe we spend the whole year doing this, right? And not breaking up, and then we start to actually break down on the monthly charts. Shoulder, head, that could be a massive sort of massive rounding top. And if that happens, guys, then we could probably see maybe 1-2 years or more of a bear market. Okay, now bear market, okay guys, not a crash. Don't just think it's going to go straight down. Same for the S&P 500. Look at the S&P 500, right? Now the S&P 500 hasn't made a lower low on the monthly chart, line chart yet, right? We're still making higher lows through here. So, but one thing you want to be watching out for, and again, this is as the months go on, okay? You check it now, and then you come back next month when it closes. So this is probably looking at least a 12-month to 2-year view. If we do hold through here and we rally back up, and then we hold, and you start to notice we're coming back down through here, and we are breaking those levels, guess what, guys? Shoulder, head, shoulder, breaking of the neckline. Therefore, that spells us a very, very, very dark period for a couple of years at least. But again, guys, this is just a very long-term view on what may happen. We may spend the next 12 months rallying back up to complete that right shoulder. Or guys, you know what? That may not even be a right shoulder, right? We just don't know. It's just something you just need to keep an eye out for. We could just do this here, right? And then continue back up, and there is no right shoulder, and we continue back up here. The question is then, if it does that, is that some form of a false breakout or not, right? So see how that you always just need to flow with what the market's doing right now. And the same for the Nasdaq, right? Look at the Nasdaq. The Nasdaq's the same sort of thing, right? We have a higher low, a higher low, a higher low. If we do start to form some form of a bottom here, and we maybe for the next 6 or 12 months we rally up, and then maybe into next year we start to rally back down again, and we start to break these levels through here. We have a low, higher low, higher low, higher low, higher low, higher low, lower high, shoulder, head, shoulder, head, shoulder. That could spell dangerous for a couple of years, right? But we're probably on a short-term basis, guys, as I said before, short-term basis for the next, say, 6 months or this year, we're probably likely to see a very sharp snapback at least. And then over this year, guys, just keep an eye on that chart there, because if you're looking for the next big short, so to speak, the charts will give you that, okay? All right, Michael, I'm speaking to you right now, okay? One of my private clients, he just doesn't understand that. Listen to the charts. The charts are going to give you some form of a top, some form of a warning that this is a major top here, okay? Anyway, and so just listen to the charts, guys, and bend and mold with that. Let's go have a quick look at the silver and gold markets through here. Let's have a look at gold. Gold has done what? Gold has rallied back above here, causing this false breakout. So even if we do get a bit of a pullback, I see gold, it's still pretty much doing nothing today. But I see gold, even if we do get a bit of a pullback through for another couple of days, I see gold having a very nice breakout and a very nice move back to the upside through there. And I see this thing rallying back up to around the 1800 level. Silver right now is also really interesting as well too, right? Because look at this here. Well, look at that weekly chart. Look at this here. Remember I said before about false breakouts? Low, low, a flush down and a flush back up. So if this is a false breakout, and especially guys, if we can start to qualify it, as in like this market starts to come back up through here, and then we start to do this, and if especially we start to do that, and then we start to see a breakout above this resistance level here in this place, that will give me the confidence to say, you know what, we're probably right now at a major low level. If we start to see this through here, and I don't care about picking the bottom, guys. I don't care about picking the bottom. All I care about is what is the probability of this actually playing out, okay? And so once the market tells me, so the market has to do this, probably come through here and then start to break out through there. Once the market starts to do that, guess what? A low followed by a breakout above the resistance level on this weekly chart. What does that tell you? This here is probably going to be the final, I'm not saying it is right now, right? We just got to watch as the weeks go on. This is telling us it's going to be the final low. And with this low and the breakout, tells me we've had 1, 2, 3, 4, 5, 6 years worth of nothing. That tells me we have at least 2 to 3 years of nice upward movement. You see what I'm saying through there, guys? So wait for, if you're looking for a really good long-term entry into silver, wait for something like that, right? So I'm already in silver right now myself, but if I'm looking to add my position or increase my position or whatever, or buy more, then that's what I'll be looking for right now. Okay, so there's a bit of thing that I'm looking at there with the silver and gold update there. Now let's talk about the powerful pattern that forms in the markets here. Okay, it's a very, very, very simple pattern, but when you see it, it's like, I see it now, right? So let me bring up this chart through here, and I want to bring up the SPY, and let me bring up the 1 minute chart through here. All right, and look at this thing through here, right? So look at this. I noticed this today. Look at this. So I noticed on the 1 minute chart, I was trading because I only trade the last hour of the stock market. I don't normally look at the 1 minute charts, but for some reason I was looking at it today, and I noticed that, hang on a minute, we're compressing up here, right? We're compressing up. Now, one thing I know about triangle patterns is that there's no guarantees, even if it is an ascending triangle pattern like this here. So if the market's resisting, and the market's sort of coming up through here, we have a higher low, right? Higher low. We could either break up or break down, right? So depends on what we just don't know where it's going to break. But wherever it breaks, then we're likely to see a nice move. Now remember, guys, I also knew the Dow Jones was hitting that major resistance level, so we're probably going to get a bit of a pushback off that. But by looking at this here, look what I noticed, right? Bam. Right, so this is the 1 minute chart. Let me actually bring up the S&P 500 at the exact same time. This is what I was noticing here at the on the S&P 500. Look at this here. We're squeezing up. Let's go back to the SPY. So we're squeezing up into this triangle pattern here, as you can see. Right, and then guess what? And then suddenly we have this higher low. Look at this here, right? So the market was telling me something was changing here. We had a low, higher low, we had a high, then we had this lower low, bit of a double top, and now we're actually breaking out and down of this channel through here on the 1 minute chart, right? On the 1 minute chart there. So what I did is I went and purchased, let's show you here, the 253 put options. It was actually the weekly. I was going to be in and out in one day. So let's go back to this chart through here. This one. Right, this one through here. So as you can see, it was this one right here. As you can see, right, let me just zoom this a bit more. So I knew we're likely to break out here. Then I said, okay, where are we likely to run to? Once we got the breakout, where are we likely to run to? So I went to my 15-minute chart, and then I knew, okay, back over here, see this resistance level here? This is where the breakout was on the 1 minute chart. Okay, so this is where the breakout was on the 1 minute chart. You can see how it was breaking down. I said, okay, at least we're likely to run down to around, say, the 250 level on a short-term basis, maybe a bit lower, but this resistance here is probably going to be that target. So if I go back to my 1 minute chart now and I squeeze my chart up, that simply means around this level through here, around the 250 or so, that's where I believe it's likely to get to. So that's when I got into it, and as you can see where the options were there. There's around, say, 690 or something like that. Again, this is like 1 day option, you know what I mean? So just first out of the money through there. And then you can see how it ran down. And then when we end up getting this big flush down through there, then I was out of the trade. It actually got to my target really nicely. And when it got to my target, then I was done, okay? Came down. But what happened? Look at this here. Squeezing up, very nice breakout and a run. Okay, and you can see here that very nice move up from there to there. And again, it was about a 40+% return. And again, it doesn't look like much, but that was in a matter of 8 minutes that I got a 40+% return there. So I have longer term positions in the SPY right now. I mean, I have long-term call options, But when I see patterns like that, I'm going to take advantage of it, and it's going to be really, really nice. And you can see what's happening right now. We're just sort of just doing nothing here after market hours, but you can see right when I squeeze it up. Look at this here, squeezing up, and then we break out. Not really much going on. Hasn't been much going on for a while, and then we break out, and then we went for a nice run. And once again, this resistance level back here around that 250 level was indeed my target. So there we go, guys. I hope you enjoyed this. Take this pattern here, guys. All right, trading doesn't have to be that difficult. It actually is not that difficult. Trading is quite simple. All we have to do, right? So as I said before, and I must understand this, as I said before, that 10, maybe 15% of my trading, especially lately, is doing some of these longer term trades, right? So I'm in some stocks right now as well too. I'm long JP Morgan, I'm long Apple, I'm long the SPY, I'm long SLV, these are longer term trades, right? Minimum 12 months view. And then 85% of my trades are done like this here, right? Which means I'm looking to get in and get out. Sometimes it's on a daily chart and I'm holding for a few weeks or more. And sometimes, like today, I don't normally trade the 1 minute chart, but when I see things like that, I'm going to take advantage of trades like that. So trading can be quite a very, very, very fun process. And that's where things can really, really, really do well for you. So a nice 40% return for me today in 8 minutes before the market closed. Thank you very much for your homemade biscuits. I'm really, really grateful for that. I hope you learned something from this today, guys. As I said before, the very first person to email me gets access to my coaching program, and I'll be there to help you and coach you and help you identify trades like this as well. Have an amazing day, guys.